This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now in the hot seat on today's show, well, I don't know if it's really a hot seat here on Market Talk. Maybe we'll call it the discussion chair or something like that. DuWayne Bosse, Bolt Marketing, joining us here today. DuWayne, good to catch up with you again, sir. How are you?
Doing real well. Like you said, it's that fall time of year, kids back in school, busy with fall sports, but it's all very good. Excited for Friday night football and yeah, enjoying life. I love the fall season.
Yeah, we were talking about that a little bit before we jumped on the air. It makes for a busy time when you're running around watching the kids and also getting ready to hop in a combine here pretty quickly. In your case, I know harvest is going to be creeping up here real quick, and you know what's creeped up on us as well, DuWayne, is this September WASDE report out Monday. I want to start there with our discussion. Looking at the average trade estimates, the average estimate on corn yield 172.5, a range 170.6 to 174.9. I wonder, say we get a 172.5 from USDA, is that neutral? Is that bullish? Is it even bearish when it comes to corn prices? After good buying that we've seen on Friday, I should reiterate that. But what are your thoughts going into Monday and that average trade estimate for corn first?
I think if they would come out with the average trade estimate and print that number of that 172.5, I think that's a bullish number. A lot of people talked about once we get up to the 680 December corn, that's high enough until we find yields below 170. I actually kind of disagree with that. I think we'd be at 7 to 720 if USDA confirms it. And I think that's what we're waiting for now, is for them to confirm that this crop isn't as big as we thought a couple of months ago, not nearly as big as I thought it was a couple of months ago. So no, I think that would be a bullish number. And here's the twist, Jesse, is even if it's a bearish number at 173.5, which is probably more where I'm at, I don't know if the trade really crashes either. I think the trade kind of goes, yeah, you're slow playing it and you'll have time to decrease it in the upcoming months. So I hate to predict these reports because it seems like I'm always wrong, or the trade goes against even if I pick the report right. But I'm leaning friendly corn into this report, no doubt about it.
Well, and it looks like the harvested area number average trade estimate looks to be pretty close in line with the August number. I don't think we're going to see many changes there on the corn side. Production would be down, obviously, if we have, lower production, lower yield estimate. But those average, I'm with you. It's hard to predict the report, but this September report, of course, the first boots on the ground estimates from USDA. So one has to wonder, what we're going to see. And I wonder if Friday's action with a lower U.S. dollar giving us that sentiment for a little risk on trade pretty much across the entire board, if that gave us a reason to kind of, run up a little bit here into this report, maybe people don't want to be short going into the report.
Yeah, I think you're probably right there. Yeah, it really does help that U.S. dollar going lower today to end the week, because earlier in the week we're making 20-year highs and recession talk is out there that, Europe's going to be in trouble. And if the euro goes down, then of course, the U.S. dollar is going to go up. Yeah, I think you're right. Whenever we can avoid that recession talk type days, we seem to have these solid up days, because I think the funds want to be long these markets now, thinking that maybe this is actually the safe haven as far as their investments, especially those index funds. They're the ones that are long only, they're either long or they're just out of the market. They actually got out of a lot of positions here this late summer on the corn market. And I think they're building those positions back up. And if you want to feel good about those positions, just find out that the U.S. supply is tighter, right? That's all you really need to do to feel good about it. And to your point, if they lower that yield, that our production number with a tiny bit lower acreage harvested, that production number drops about 300 million bushels. And last year we're at 1.55 billion and we ran to $8+ on the board. If we're talking to 1.2 now, it's hard for me not to get bullish this market, and you and I have talked before about some gaps up there in that 730 area. And I guess that's kind of my target for the corn futures this winter, and maybe sooner rather than later, but we'll see. Time will tell.
On the soybean side, DuWayne, I think there's a lot of thought in the trade that we're not going to see much of a change in the yield estimate from USDA, but I wonder what you're hearing from folks you talk to. What are you hearing from farmers across the mainly the Western Corn Belt, Upper Midwest? I mean, Is there potential this soybean yield estimate holds? Because I know here this past week, this soybean chart has looked pretty scary, pretty iffy outside of Friday's action.
Right. Yeah. I'll say this about the Western Corn Belt. We sure wish we had another rain or two to finish the soybean crop off. A couple of weeks ago, I was like, yep, nope, I think USDA has it pegged right. We're going to have a big yield. And maybe the Eastern Corn Belt can make up for the West, but it just didn't finish like I wanted it to. Now, the soybeans are just impossible to forecast as far as a yield. I won't even give it a shot on my own farm, so I don't know how to predict it nationally, but I still think USDA is right. Let's consider it being a big crop until proven otherwise. But man, I think a rain here, late August, September would have really made a world of difference. I'm in a small area that's still pretty green. It looks pretty good, but you travel south of my area, which is northeast South Dakota through South Dakota, boy, she dried up in a hurry. And obviously the Pro Farmer Tour found that in southeast South Dakota, but yeah, so maybe we're trending lower, but I think the trade estimate has us down like almost a half bushel an acre. And I don't know if we're going to make that drop or not. But if we do, Jesse, or even stay the same, here's the fun thing is our ending stock is still fairly tight, below 300 million bushels. So there again, too, even if you give me a bearish report, I don't think the market's going to care that much. Now, soybeans, you mentioned the chart being ugly. That's because soybeans are tied more to the outside markets and money flow more than any other commodity we basically trade. But it was interesting. We broke that support this week on the chart when we went below 1376 in November beans, and then the sellers dried up. And without anyone to push to sell it even more, the buyers felt confident to come back in, and now we're ending the week on a very nice positive note. So again, it feels like below $14 is somewhat support, which is fun as a producer myself to say under $14 is support for soybeans going into harvest.
Well, and as well on the soybean side, I know we've had the news this week out of Argentina, their peso to dollar ratio, the government trying to get beans out of the hands of farmers. And they've done that here this week in Argentina. How much do you think, though, now that we've kind of gotten past the initial movement, I think, of beans from there? I mean, how much does that story really play into this bean market, do you think, moving forward? It feels like a Band-Aid to their broader economic issues in Argentina right now.
Yeah, no, I think you're 100% right. Because, I mean, it's a temporary fix to their currency to get some producers to sell the soybeans. And like you said, it worked. I think it was like 3 million metric ton in 3 days. So they did sell rather aggressively, but they're not going to keep that fix there all the time for them. They'll take it away and then selling will dry up. And I mean, these are beans that were going to hit the market eventually anyway. I think the bigger story in South America that's a little bit bullish this market is finding out this week that La Nina is going to extend out to the end of this year. Of course, La Nina means, hotter, drier, especially for South America. Now, they'll start planting beans as we start harvesting, right? But a lot of times you'll hear they wait for the rains to come before they start planting. Well, if La Nina is there and it extends the dry season a little bit longer and they plant, say, 2 weeks later than normal, that just extends our export window to China, hopefully anyway. So I think there will be a bullish story there. Remember, we already pegged Brazil's crop with this huge record, so that if we start to talk drought, even in the next couple of weeks, that'll help pull up the soybean market, I think, a little bit more.
DuWayne, on the overall action Friday across the board, I know you mentioned to me before we went on the air that it was kind of a low volume day. Even though it was a good day Friday, it was kind of low volume across the grains especially. Talk about what you saw on Friday.
Yeah, honestly, I kind of thought we were going to just lull into sleep after about 9:30 because it seems like the funds came in and bought the market, and the stock market was higher, crude was higher. I understand this being higher, but I thought now with a report coming in a weekend, we're not going to see buying. But boy, we really pushed all the way into the close, continuing to make highs as you get into the last hour. I was impressed with the market today. Like you said, maybe people just don't want to be short this market, don't want to be short going into this report, which is a good sign, but also my ears perk up just a little bit that like, well, remember which way everyone's leaning into these reports, so it's funny. I know I've talked very bullish going into this, but I also look and go, 680 plus December corn going into harvest is nothing wrong with that, especially if a producer out there listening has a really big crop coming. If he wants to buy some put options for next week, there's nothing wrong with that. And I'm sure I'm not going to stop him.
Well, thinking about coming into harvest, typically we make a harvest low, yet we're seeing some pretty good prices on the board, DuWayne. So, thinking about that, I would have to think risk management is probably pretty paramount here heading into a big report like we're going to see on Monday, just because, you mentioned some of the levels, 680 December corn, give or take, $14 beans, November, give or take. Those are pretty strong levels to hold in case we end up with a USDA surprise. Someone made the joke to me the other day, the S stands for surprise in USDA, and that is possible coming up on Monday, DuWayne.
Well, surprise is a lot better term than I've heard other guys mention to me what USDA stands for. So we'll just drop that and leave that right there. But you're right. These are good prices. But you mentioned the harvest lows, and we made our harvest lows back when we thought this crop was the biggest we had our forecast, and that was back in July. That's where we made our harvest lows, and ever since then we started to realize the crop isn't maybe quite as big as we thought, and therefore we started to rally since then. And that's when the funds were at their lowest level as far as the amount of longs, and now they're starting to build those longs again. And really, that's all I need to know to feel good about a market is which direction the funds are heading. And in corn, they're definitely buying. Beans, not so much, and I understand it. We don't quite know, and Brazil has that big crop. But me with my bullish story of La Nina is probably going to be a story here until the end of this year in South America, and that's all we need is a weather scare, and that'll go. Now, China's demand, is definitely in question, but any stories out of China, Jesse, I kind of question anyway. To me, China, if I wanted soybean prices lower, I'd put out a story saying I'm questioning demand. We don't need it as much because then they'll get them cheaper anyway.
Well, let's turn our attention to the wheat market a little bit, DuWayne. That kind of had its own storylines to follow here this last week. Obviously, Russia President Putin's comments about the Ukrainian grain deal really felt like it kind of sparked some wheat buying. And then, we kind of pulled back as we worked through Thursday, and then we've basically got all that back, and then some on Friday. Lower dollar, I would have to think, really helping wheat. But what's your thoughts on this wheat market here after this week? It headed into the report on Monday.
I'm a bull in the wheat market too. Man, I'm not always bullish. You know me well enough to know I'm not. I'm sure sounding very bullish here as I talk, but for good fundamental reasons behind wheat. We made a nice harvest low. We erased all the premium we had in the Ukraine and Russia war, right? But it's still going on. And like you said, this week, Putin kind of announced, maybe this Ukraine export deal isn't a good deal because the wheat isn't going to the poorer countries. What he failed to mention is the reason it's not going to poor countries because it's very expensive to get it through the Black Sea because insurance is very expensive because he's in the middle of a war there. But I digress. I like the wheat market because I think there's a bullish story coming this winter. And it's not even 100% the war in Russia increasing along the land, but it's the Ukrainian farmers with very low prices there for their domestic product, with a sense of why go out and plant the winter wheat if it's only worth $2 a bushel right now, and I don't even know if I'm going to own that wheat field next year. Not to mention, artillery shells flying overhead every once in a while. So I just think there's a story there that they're just not even going to plant it. This last year we rallied up on, will we be able to get the wheat out or not? If they don't plant a lot of it, then there just isn't even the wheat to get out of the country anyway. So it makes me very friendly, that market moving forward.
Well, and I'm just seeing a note as well. Ukraine wheat harvest looking virtually complete, around 19.2 million metric tons. That's down from 33.1 last year. So obviously we've seen the big impacts, smaller crop there. And then you throw on top of it too a Russian wheat crop that is reportedly very large, and some of those southern plains risks with getting going with planting. I'm with you. I think there is a lot of fundamentals underneath this wheat market that are bullish, or at least look to be very bullish.
And they really do. Now, Here's a great thing for our North Dakota producers that have had tough weather the last couple of years. They're harvesting a great spring wheat crop right now for the most part. I mean, we planted it super late. Guys planted it in June because they said, well, I'm just not going to plant corn this late. And they went back and planted wheat and thought, well, what the heck, maybe. And man, it's coming off great. The weather's been good for it, which we thought would be tough and maybe quality issues, but no, it's coming off really well and some very surprisingly high yields. You can get further north into Canada. You'll find some dry spots, but I think we're going to see a rebound in production. So it's funny, we're talking how bullish we are this wheat market, and I think we're right in that assumption. But it is a good price too, and I'm just happy for the North Dakota guys who haven't had bushels the last couple of years to sell.
Yeah, and I've heard some of those numbers coming off the combine in North Dakota, and I'm with you. They are very good in many areas. But the other comment I've heard is, well, it's very good, but now I need to put a 9 or a 10 or whatnot in front of this number here. So I think that's something that producers are going to be watching here as we move forward. Talk to me just in general, cash basis across the country. What are your thoughts with how cash basis is looking here as we head into harvest, DuWayne? I'm sure it's still kind of a region by region thing right now.
Well, it's always regional. You're right. But there sure seems to be the same theme out there of, you'll get some spots where the old crop basis is still strong. They're still trying to buy a few more bushels before harvest, but it's nothing like what it was a month ago. The basis is widening out, is falling apart, as well it should. I can talk about a tight supply all I want and a lower yield, but the fact remains, U.S. is not going to run out of corn in the next 3 months. So therefore, the basis is going to be wide. And, if to truly grab all these markets and win at all of them, you could say basis is one thing you need to do. And the only real way to trade basis is with the physical commodity, right? To actually hang on to it. So I guess I'd suggest to guys, even though these are great prices, to store this stuff, wait for 2 months or so for the basis to get better. Because I think even come January, this basis is going to get quite a bit better. But through harvest, it's going to be a wide basis, maybe not like normal because people are aggressive. But boy, farmers don't need the funds right now. They've had a couple of good years, some government payments mixed in there. Once the bin doors go shut, they're kind of welded shut till after the first year, I think.
I couldn't agree more with you on that. And I think as well, too, as we get into this fall, I think a lot of farmers are going to be watching those drying costs as well. If they got some high moisture crop, what's that going to look like? Could that maybe sway some decisions one way or another, or, keep those bin doors shut? I think that might be the only catalyst to maybe move a little more grain if the price is right and we had a high drying cost, possibly, DuWayne. I don't know.
Yeah, possibly, but the hot, dry September we've had so far, I think helped push the corn a little bit closer. But you're right, and I think some guys have booked their propane needs so far, and more guys are talking about just getting it off because those phantom bushels we tend to lose. So, but you're right, maybe there's something there that maybe pushes, maybe send it to the elevator, let them dry it instead of just throwing it in a bin with air. We've all heard some of those disaster stories. But the one thing I will mention on the energy side is diesel fuel actually concerns me, and not just the price. I'm talking just the supply of it. With what they're pushing through the pipeline right now, I'm afraid when they flip and finally switch to diesel fuel coming up here, it's going to be a little bit too late. So I'm not really good at predicting which way price is going, but I will just tell you, just get it on your farm, because I'd hate to not have a combine run because you ran out of diesel fuel.
That's a great thought, great advice. Livestock market, we have not touched on that yet today. Just briefly here, cattle, hogs. It's been an interesting week. This hog market's been kind of collapsing a little bit and kind of retracing back down. The cash index has been coming down, kind of getting more in line with October. And then cattle as well, pretty lackluster week in cash country. Any thoughts in this protein sectors? We're kind of moving out of grilling season now, DuWayne.
Yeah, I think you nailed it there with the last statement. We moved out of grilling season, and it kind of got to be a blah trading week in the meats, didn't it, a little bit? Demand's a little sloppy. Weights have started to pick up as the temps went down. I mean, carcass weight, so therefore we have a little bit more production. Packers have a little bit more leverage then. They don't have to pay up to buy those cattle now. They know you have to sell them, so that changes it. So yeah, cash market has been very quiet this week. But overall, happy with the way the livestock futures are or finishing the week up here today. Rallying back up. All the recession talk we've talked about, we still got cattle near 150. That's pretty awesome actually. And the cash feeder market, like in my area, Northeast South Dakota, is just white hot. So I think the packers are buying a lot of these calves, and if they're buying the calves, maybe we should be listening. So I'm still being bullish that market as well. The hogs are a little tougher though. I'm a little concerned. Our export demand just isn't quite there. And, obviously the cash market is falling apart pretty hard to come down and meet the futures. And I think sideways at best in hogs is what I'd call.
Fair enough. Well, before I let you go, any final thoughts you have for us real quick here on the show today?
No, I talk so bullish. And when I know I do that, people tend to like, well, I'm not going to hedge. I'm not going to sell. But I will say going into always those USD reports, if you can get your hedge account in a spot where you don't care if it's bullish or bearish, you've done your job. So if you've got to buy some weekly put options, then you can cheer for it to go higher. Maybe do that. Other than that, yes, I am leaning bullish, and I'm fairly confident you're going to see higher prices here later on.
Well, I know if folks need some advice and will want to talk to you, they could reach out to you very easily there at Bolt Marketing. How could they get a hold of you, DuWayne?
Yeah, hey, they can just call us directly, 605-448-2365. And they can always check us out online at boltmarketingllc.com.
Well, DuWayne, always a pleasure, sir. Appreciate the time. Have a great weekend, and we will talk to you again real soon.
Sounds good. Thanks, Jesse.
DuWayne Bosse with Bolt Marketing joining us today. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.